What is up, everybody? Joe Everest, the fence expert. Today we've got a special guest. We've got Blake Wixson. Blake, why don't you tell us a little bit about who you are and what you do?
All right. Well, I'm Blake Wixson. I'm with PJC Insurance here in Springfield, Missouri. I'm the commercial lines manager over there. I've been there for a little over 8 years with the company. I went to school here in Springfield, Missouri, and also went to college here in Springfield, Missouri over at Drury University, and then transferred over to the insurance world where, I'm a third generation insurance agent. My grandfather had an agency. My parents just retired in May this year for their insurance. So led me into the insurance world.
So a third generation insurance guy and a third generation fence guy.
That's right.
All in one show.
Can't beat it.
That's right. Well, guys, I get a lot of questions, and I see a lot of questions, like say in the Facebook groups and that sort of thing, regarding insurance. It's always kind of there's never a one size fits all answer. So you get several different questions, usually about the same thing. And so what I wanted to do is bring Blake on and just kind of have a chat about insurance. Now, one thing that's important to remember is that, we're obviously based in the United States, so it's specific to the United States, but it's also specific to Missouri.
Correct.
Would that be right?
Correct. Yeah. Each state's got a different guideline on their insurance. So everything that I generally talk about today will be based off of Missouri.
Okay. So for the broad strokes will still be applicable, but for the minutia, the more finer details,
correct,
they should reach out to their insurance agent.
Correct. It's best to go over your insurance agent that looks and reviews your policies each year for the specific thing that you're needing.
Sure.
This is just generic for Missouri, and and hopefully you guys pick up on something that you say, well, maybe I need to ask my agent if I have that coverage, or hey, that's a good idea. Let me call my agent and let's get this enforced,
That's right. And a lot of them, so a lot of the answers are really going to be, would need to be specific to the company.
Correct.
Just depending on, how large the company is, maybe how many employees they have, what type of business they're into, that sort of thing.
Yep, exactly. It's all based off of, number of employees, payroll, gross sales, what industry you're in.
Okay.
If you're a contractor, most of it's based off of payroll.
Sure.
If you're in manufacturing, it's mostly based off of sales. So.
Okay. That makes sense. Well, let's talk about this. So we talked about that, whoever's watching, if they have questions, that they'll want to reach out to an insurance agent. But there's more than one type of insurance agent. Is that right?
Correct. So there's your captive agents, who are your standard carriers like State Farm, American Family, Farmers. So those are your captive agents. So a captive agent has normally that one market to go to that can go and get your quotes and get it out to you. And then there's the independent agency like myself and PJC Insurance, where you come to us with your needs. I get your needs and I send it out to a variety of our markets. For a fence contractor, we may have 40 or 50 markets to send it to, and we get the best quote, best coverage, best price. It's not always about price. Coverage is the main thing here. So we always get that, and then I present it to my insureds, and that's how we take care of things. So basically we do the shopping for you.
Gotcha. Yeah. So Blake handles our insurance for Ozark Fence Company. So when you bring me the bids, I guess would they be bids from the insurance?
Quotes.
Quotes. Yeah.
Yep.
But you generally bring me several.
Correct.
And we kind of talk about, and like you said, we don't always go with the cheapest.
Correct.
Because the cheapest might not be the best fit.
Correct. And a lot of things is you send it out to the market, and one market has a little something different than the other market. And I say, hey, Joe, this may fit you better, and in the future, that's maybe the route we need to go.
Okay.
Even if it's, $500 to $1,000 more, you're a guy that, you look into the future and you want to protect your business and your family legacy of defense contracting. So you want to make sure you're covered correctly. It's not always about price.
Yeah, absolutely. Yeah. And they can change year to year as far as what's offered and how it's offered.
Correct. And also even markets, that's what's good about independent agency. If you get a market that increase the rates across the board, captive, sometimes you're stuck with those rates.
Sure.
As an independent, I can send it out to another carrier that carrier's hot this year for that market. I send it out to them and get you a better price.
Yep. And you do the legwork.
That's right.
You do the legwork, but you also know that.
Correct.
Which markets are more hot for that particular
Correct.
contractor.
Correct.
Whereas if I were only dealing with captive agents, I would have to deal with multiple agents, and I would have to try to know which markets were and weren't the best for me that particular year.
Correct.
Yeah, so to me, it makes sense, and we've talked about this quite a lot. It makes sense to stay with an agent like yourself that has access to all these markets, because really, part of what you do as a profession is knowing what kind of insurance coverage I need and knowing my business.
Correct. We see contractors day in and day out, or even other industries that we're involved in. So we know what the market's doing. We know what type of claims are going on in that marketplace. Each year brings new obstacles. So
We're having technical difficulties real quick. There we go. And we're back.
We're back.
All right. How much of that did we miss, Jeremy? Okay. All right. Let's take a break real quick. Take a break, Blake, real quick. Say that 10 times fast. Let's say hi to a few folks. Hello, Dan. We mean this better be good. It's always good, Dan. Dan the Fence King joining us. Roger. Hey, thanks, Roger. I appreciate that. Yeah, if you guys are enjoying this stream, if you find it helpful, educational, or heck, even entertaining, give it a like. That would mean a lot. If you guys are new to the channel, consider subscribing. If you do subscribe, hit that notification bell so that YouTube lets you know each and every week when we have new content available. Thanks, Roger. Fish and Pickens, making sure we know. Thank you. Appreciate the heads up. Actually, we got that from quite a few folks. All right. We're good. Well, guys, those of you just joined us, appreciate you coming in. We're talking with Blake with PJC Insurance about business insurance, but also business insurance. But I'd like to talk about two different perspectives, from the contractor's perspective, but also from the homeowner's perspective. Those of you just joined in, what we're going to talk about is specific to Missouri within the United States. But if you're not in Missouri, if you're not in the United States, it still give you a pretty good overview on what you should be asking your agent about. So, Blake, let's talk about just kind of the broad strokes of like a commercial insurance.
Okay.
So a lot of guys will say they're fully insured, but fully insured means a lot of different things to a lot of different people.
That's
that right?
Correct. Very correct.
So I think the big one that we should talk about to start off with is probably workers' compensation.
Correct.
It's a piece of insurance that is incredibly valuable, even if you don't use it.
Correct.
But especially if you need it.
That's right.
So let's talk about overview. What is workers' compensation?
Okay. Workers' compensation is for your employees that get hurt on the job site or doing work in the scope of your business. Okay. So, in the state of Missouri, it's if you have 5 employees or more, it's a state law that you have work comp. But if you're a contractor, it's 1 employee. So that's different for the contractor side of things.
Yeah. So
a lot of people don't see that and they say, oh, it's 5 employees. But if you're a contractor, it's technically 1.
Gotcha.
So that's the big thing there. If say, Joe, you're working for me and you get hurt, work comp's going to cover you fully medical. So it's going to cover full medical for you. And then if you lost time, it's going to be 66 2/3 of your weekly pay. So, so you will get some income off it as well. One big question I get from a lot of guys that are just individuals is, why am I included on work comp? I don't see
Sure.
any benefits from this.
Sure.
Well, actually, you do. Even as the owner, you still get full medical and get lost wages if you are out more than 3 days. It's 66 and 2/3 of lost wages. So,
Well, yeah, because even no matter how big of a company you have, the owner still finds themselves putting on the tool belt from time to time.
correct.
And it would be my luck that if I were excluded and I didn't have any coverage or anything like that, that's when I would get hurt.
Correct.
And then let's talk about for a second that the owner is quite possibly the most valuable employee to the company.
Mhm.
They don't call in sick. They probably give more than 100% pretty consistently, and they make the wheels go round.
That's right.
And so, we want to make sure myself as an owner that I'm covered so that if I do go down, that I'm supported and I get help through that.
Correct. Another topic that you and I talked about earlier today, was subcontractors.
Yeah.
If you're hiring subs, you got to make sure that they have their own insurance. They need to have their general liability. They need to have your workers' compensation. If we hired a sub and he gets hurt on my job and he comes back to me and says, "Hey, I got hurt on your job," I am responsible for his injury. And so that's when work comp will come in. And that's what a lot of guys don't understand. They said, well, I'm 1099 him. He's not an employee.
Sure.
But you're telling that 1099 what to do on the job.
Yeah.
And that's another thing is make sure that when you are doing the subs and you want to make sure that they have their own insurance, is if they don't, if they work for you one day, work for me the next, and they get hurt on my job, they come to me and say, "Hey, I got hurt on the job." And I said, "I'm sorry, I don't have work comp." They go to you and say, "Hey, I got hurt on your job. Oh, I have work comp. I'll turn it in." So they're going to find out a way to get it covered.
Yeah.
So that's why we always say, anyone that does work for you, make sure they have certificate of insurance and it's on file.
Yeah.
And because you know how it is, audits at the end of the year.
Yep.
They ask for them. Hey, so Joe was a contractor for you. Where's his certificate of insurance?
Sure. Well, because insurance in general is just covering the liability, right? Is trying to make sure that if there is liability, that it's insured, that it's covered.
Correct.
And so that's really what the auditor's position is to make sure, hey, was there any liabilities out there that we don't know about?
Correct.
And if so, we need to cover those.
That's right. And we need to charge for that amount.
Sure.
And that's where you get these big audits is, my sub, I paid him $50,000 over the year and he had no coverage and then audit time comes and I only predicted 50,000 on payroll. So it doubled my payroll. So then I have a big audit because they're going to collect premium on that exposure they had that year. So.
Well, yeah, because they've had that exposure all year long.
Correct.
And so, so it'll be a big check to write that day.
That's right.
But really the thing to think about is actually that's a year's worth of coverage.
That's
you just have to pay it all in one day.
That's right. That's right. That's right.
So that brings up a good point in that because you brought up payroll. Yep. And so that's generally how workman's compensation is calculated. Is that right? Based on payroll?
Yes. So you're class coded for the operations that you're involved in. You got a fence class code, you have a shop class code, you have clerical class code.
Yep.
And that's just some of that Joe's are in,
Sure.
So every industry is different. So you got to be class coded correctly.
Yeah.
And it's always based off of payroll. Your clerical rate, which people that are doing office work.
Sure.
Is going to be a lot cheaper than me going out and doing fence installation just because the exposure there.
There's less chance of a costly injury.
Correct. The roofing industry, that's one of the highest class codes out there right now because if you get hurt on a roof, it's going to hurt.
Yeah.
You're going to fall off the roof and get seriously injured. So that's why these roofing workers' compensation policies, rates are so high.
Just because, the risk is so high. And So in our business, we have the clerical code, we have the fence installation, we have shop, we also have outside sales.
Yep.
That way, because again, an outside sales risk is different than an installer's risk or a clerical risk.
Correct.
And again, we have a shop code that way because those guys aren't seeing the same risk either.
Correct.
So it'd probably be really important to sit down when you are talking about your workers' compensation policy and making sure that your agent understands what roles and what tasks your workers perform.
Yeah, and that's the one thing that we ask as agents, just be upfront. Exactly. I go through and say, okay, give me a list of employees. What does he do on a day-to-day basis? What does she do on a day-to-day basis? that gives us an idea. Hey, their payroll needs to go into this class code. His payroll needs to go. Hers needs to go here. So you can break it up that way,
Sure.
and that can save you premium wise too.
Yeah.
Because if you lump it all into fence contracting, and half of your employees are doing outside sales or clerical, it's a whole better rate.
Yeah.
So it's costing you money.
Absolutely.
When it comes to audit time. So
gotcha. And one thing too to mention too, Blake, is that once you put an employee in that class code, they aren't locked into that class code. Is that right?
Correct.
So if I had an employee that was part-time on the fence crew and part-time in the shop, I need to track his hours for each.
Correct. You need to make sure the documentation's there.
Sure.
And it says, hey, from this time to this time, I paid him this, and they were in the office.
Yeah.
This time he's out installing fence.
Yeah.
Because otherwise, if it's not documented correctly, it will go to the higher class code.
Yeah. You have to be able to produce documentation that says, they clocked out of their fence crew at this time, they clocked into the shop on this time, and that's how the hours are split. Yep. Very good. Very good. So workers' compensation, now does any agent have access to a workers' compensation policy?
Yep. So majority of your agents should have it.
Okay.
I mean, I would say 100% do.
Sure.
Then again, there's different markets for it too. So some may have one market, some may have a variety of markets.
Okay.
And it all determines on the operation as well.
Sure.
The higher risk class codes, not as many markets are a player in those fields. So that's something you have to see too.
Understood. Very good. All right. So we talked about workers' compensation. Let's talk about just like general commercial insurance for a minute. Okay. So like a general liability policy.
Yeah. Your general liability is property damage or personal injury to others. So if you're out on a job site, you're digging fence posts and you hit wires and you damage wires.
Okay.
And, that's a good thing about you guys. You do dig right.
Sure.
So if dig right wasn't called and you guys were responsible for digging without calling dig right.
Yeah.
And you damage, say, the AT&T wires.
Yep.
How do you think AT&T is going to get that bill?
Yeah. You get a bill for it.
It's not pretty.
No.
So that's when your general liability will kick in
Sure.
and do the damage for the property. Say that you have extension wire out, or you're running something. And an elderly individual homeowner comes out, steps, and doesn't see the cord. Trips and falls and gets hurt. She's going to say you're liable because you put that extension cord there. That's right. So that will protect you for bodily injury to others. That's where that comes in. Now it does not protect your employees. That's where it comes.
Sure.
But other people's property and bodily injury. So
understood. And so that's really an important piece of insurance, even if the contractor say doesn't have a permanent place of business.
Correct.
They would still want general liability.
Yep. Yeah, and it also, the general liability protects your premise too. So
sure,
your yard, someone comes in, trips and falls, you're taken care of under general liability. If you're out on their job site and something happens and you're liable, you're protected as well.
Yeah, and the reason I wanted to bring up the contractors without say a office or a yard is because that seems to be a point of confusion as to, well, I don't have a physical location, so I don't really need this piece of insurance, but you absolutely do.
Correct. And just going into other coverages, you got your inland marine, also known as equipment floater.
Okay.
So equipment floater will cover your tools in transit, at the job site, stuff like that, where your business personal property covers your property at the location, at your primary location that's listed. So, if I have just business personal property and I take $5,000 worth of tools in my truck each day to a job site,
and
I get in an accident, those tools won't be covered because they aren't there at the location. That's why we got to list them for the ones that are in transit. We need to make sure you got it listed on a policy there.
Well, that's why every year when we're doing our policy, we're talking about, is there any new equipment purchases? Or have there been any equipment sales? Understood. Understood. We want to make sure that we cover the equipment as well.
Correct. And that policy also does rented equipment. I know sometimes you rent some equipment. And you can add rented equipment onto that equipment floater, and it'll cover that. So you don't have to buy it at the rental business every time.
Very good.
And that's the thing that a lot of people didn't know that. And it saves them money over the year.
Saves us quite a bit of money.
Yeah. Just to put it onto your equipment floater policy. It says rented equipment up to 100,000. So you can rent equipment up to 100,000 all year long and not have to pay it from that company.
Well, that's good to know.
Yep.
That could save you quite a bit of money just in and of itself.
Yep.
So let's talk about the vehicles, because we talked about inland marine covers the tools that are in the vehicle. But say, so we have fleet vehicles, but say if I was a one-man shop and I was just using my personal truck, I would obviously have personal insurance, but if I'm using it for commercial purposes, I would probably want commercial policy on that vehicle. Is that right?
Correct. That's something that you need to talk to your agent. Now, some personal lines policies have a little business use endorsement onto that policy.
Sure.
But if it's strictly your day-to-day operations is fencing and you're driving that truck to fencing jobs, you need to have a commercial auto policy.
Gotcha.
And the one thing that we preach on the commercial auto policy side is make sure that the vehicle is titled in the business name.
Okay.
So we'll use Joe as an example.
Yeah, you bet.
Joe's driving a truck and it's titled in Ozark Fence, and Ozark Fence policy protects his vehicle.
Sure.
If it was titled in Joe Everest and we're insuring it under Ozark Fence, he gets in an accident, a good attorney is going to go back against Joe because he's the title holder and Ozark Fence. So it's just having that liability out there that you don't want.
Sure.
So that's why it's always a good thing to make sure that the vehicles are titled and how they're insured. So if they're insured personally, they need to be in your personal name.
Yeah.
If they're insured commercially, they need to be titled in the business name.
And it really is going to depend on what they're used for.
Correct.
So if I had a personal vehicle that I only use once in a while, that would be different than a truck that I drive to work every day and use for work every day.
Correct. Exactly.
Understood.
And then, another thing is make sure on your commercial auto policies, you have hired and non-owned. So that will help you, if you go and lease a vehicle, say yours broke down, you need a vehicle, you have the liability already covered under your policy. So you don't need to purchase from Enterprise or whoever you rent it from.
Sure.
But also it covers, say, Joe, you have an employee that runs an errand for you. Say he runs up to Ace Hardware to pick up a product for you.
Yeah.
And he gets in an accident in his personal vehicle.
Okay.
His personal insurance will be first, primary. Sure. But an attorney says, oh, he's running business for Ozark Fence. They're going to come back and sue Ozark Fence. And that's when the non-owned liability kicks in and protects Ozark Fence from a lawsuit.
Understood. So that's good to think about, because, we've all been there where we need something real quick, like I said, from the hardware store. And, one of the guys says, well, I'll just go jump in the car and I'll be right back.
Yep, exactly.
So okay.
Now, not always is the business brought into a suit like that, but we've seen it, and that's why it's on there.
Well, and it's one of those things to where it's like a lot of insurance. It's better to have it, not need it, than need it, not have it.
That's right.
Because one of those ways is going to be incredibly expensive.
That's right.
Yeah, it never fails. It never does. So we've talked about automobile, we've talked about workman's comp and 1099s, how those related. Let's talk about on the commercial side. So say like the bidding side. Okay. So, because a lot of guys think, well, I have insurance for just my general business operations, but there's actually insurance that comes into play when you're doing it like a bidding process.
Correct.
More so for like public organizations, for cities and counties, but you see it, we see it sometimes on larger private projects too. Right. And that's bid bonds.
Yep.
Can you just describe, generally what a bid bond is?
Yeah. So basically a bid bond's based off of the scope of the work of that job. And the limit of the bid bond is normally the bid of the job that you're going to present.
Okay.
So if you have a $250,000 bond, normally your scope of the work for that job was $250,000. That's what you're going to charge them.
Sure.
Okay. So it covers that. And a bid bond is the start of the bid process. So you obtain a bid bond and then you turn in your bid to the organization and they review it. A bid bond will basically say Ozark Fence is financially stable. They can be bonded for your job.
Okay.
For this amount. Okay. And then once you're awarded the job, that bid bond turns into a performance bond.
Okay.
Okay. So then a performance bond basically guarantees the work for that contract in a timely fashion. Sure. So if you're doing work on a job, it's supposed to take 6 months and it's down to 10 months and they haven't changed anything on the original contract.
Yeah.
And you're not showing up, that city or whoever you did the bond for is going to come back and collect on that bond amount.
Sure.
And so
because they're going to have to hire a contractor to
Correct.
perform the work.
Correct. They got to finish the job.
Right.
So they're going to collect that money and then go hire someone else to do the job.
Sure.
And a bid bond and a performance bond, they all go together.
Okay.
And it's a bonding. And the thing about it is it's all credit based or financial based. So a lot of these carriers will do the smaller bonds on credit based, just off of the owners and business credit.
Sure.
The larger bonds, normally you have to turn in your financial statements and show, you have assets and you're making money. And,
sure.
And a lot of it is, like we talked about earlier, is off of your experience. If you've done several jobs at $200,000 jobs, a bond market is going to be more liable to give you a bid bond than someone that their highest job is $50,000.
Yeah. Yeah, because really what they're trying to gauge, I mean, they don't know the business.
Correct.
So they're trying to get some sort of idea on what are the chances that this contractor is going to perform the work in a timely manner. Correct. So if we have one contractor that consistently performs $200,000 projects, he's wanting a bid bond for a $100,000 project. Well, that seems he's very likely to complete it. Yep. On the flip side, if it's a contractor that consistently performs $20,000, $30,000 projects, but they're asking for a $200,000 bid bond, and they might not be as likely to be able to perform the work completely on schedule.
Correct. They're stretching their neck out for you to get the job done, and it's basically a banking process.
Sure.
So it does take some time, but once you get in with an agent, and if you're getting bonded quite a bit, you can be pre-approved for bonds, and it's all based off of financials and credit again.
Sure.
And I can say, hey, Joe, your bonded amount is $1 million. So any jobs under that, you're already approved for.
Gotcha.
So that's nice to have.
Yeah.
A lot of contractors are starting to see that it's more, the contracts are requiring it more often.
Sure.
So we go ahead and get them approved for the year so that they don't have to do it every time that they get a bond.
That makes sense.
But if you aren't seeing the bonds and you only do it once or twice a year, then it's likely you can just go and get it for that time.
Sure. Now the bonds themselves are based on what your bid is going to be.
Correct.
Right.
Correct.
So are they priced differently depending on how big the project is?
Correct. Yes. Yes. That and basically your credit and financials.
Sure.
You can get better rates if you have a good credit and better financials. And
now, say if I were to call you, Blake, and say, hey, I'm bidding this project, it's $100,000. You obviously already know our business, and we've talked about bonds before. You would be able to give me a decent idea of how much that bond would be for cost.
Yeah.
So that way what I'm getting at is that way I can reach out to my agent. I know about what that costs. That way I can roll it into the proposal.
Correct. Yeah. And that's the main thing is always reach out to your insurance agent before you turn in that bid.
Yeah.
So then you can cushion that bid to cover that bond expense for you.
Yeah.
That is an expense for that job.
Correct.
So you need to cover your expenses for that job. So just go ahead and call your agent in advance, get it pre-approved. He can tell you what the price is going to be, and then you can put it in your bid to make sure that it's covered and it's not coming out of your profit.
Well, that's right. And we talk about that sometimes on the channel, is that making sure that as a contractor that you're not shortchanging yourself.
Correct.
And through you, your family.
Yep.
And so that's one of those costs that you might not think about until you turn in your bid, and then they ask, well, where's your bid bond? And then you have to go get it and secure it. Well, you're going to have to pay for it. Correct. So now all of a sudden, the project that you're using it for specifically, it's not bidding that project. So now that money comes from somewhere else.
Yep.
So bid bonds are incredibly important, but there's something typically your agent that you already have a relationship with can handle for you.
Correct. Yep. And that's normally, most of our contractors come through us for the bonds. We have an individual in our office that handles majority of the bonds because she does it day in and day out. Yeah. So she knows all the process. Each process is a little different depending on which market you go to.
Sure.
Pricing is different based off financials and credits.
Yeah.
But if you can get it pre-approved and already know your rate for the bond, that's a huge advantage for you. So you don't have to wait for your agent to get that for you.
Sure.
You just put it in with your bid, submit it, and hopefully you win the job.
There you go. Very good. All right. Well, so we've talked about bonding. Let's talk about, so one thing we didn't touch on the workman's comp that I think we should talk about is the E-mod.
Yep.
So each year I get a letter from Missouri Workmen's Compensation that says,
NCCI.
Yep. That says your EMOD is point something something.
Yep.
And I never know what that means. And I say, hey, Blake. And you say, yeah, I already know.
Yep. So NCCI generates the EMOD for you guys, and it's all based off of your history. Okay. So it goes back 3 years, and that's how they develop it. A new business starts at a 1.
Okay.
And so if you don't have claims, you have good years, you go below a 1. You can go down to 0.8. So that's a 20% discount that you're getting on work comp if you have a 0.8 EMOD.
Sure.
If it's above a 1, you're credited that. So, if it's a 1.2, you're paying 20% more than what the standard would because of your loss experience. Or, and they all go off of severity and frequency of claims.
Okay.
So, one big claim will hurt you just like 3 small claims,
Gotcha.
So that's the one thing that we always make sure in your employee handbook, you got the safety protocols in your employee handbook, protect you the best you can. Accidents are going to happen.
Yeah.
And that's what insurance is for,
Right.
So you're going to have that, and that's going to be based off your EMOD. So if you have one bad claim, it's going to stay with you for 3 years, and then the following year it'll fall off.
Gotcha.
And then once it falls off, your EMOD will drop significant, and you'll start getting the discounts again.
Sure. And so that's really important to determining how much you'll pay on a yearly basis for workman's comp.
Correct.
Is severity. So has there been one big claim, or have there been multiple smaller claims?
Yep. And another thing is you see the Monday injuries. So that's when we see a lot of claims come in. It's a Monday after the weekend.
Yep.
They get hurt on the weekend. So when that does happen, always note to your agent and say, hey, please advise this market that we have. I don't know who you have on your work comp, but whoever we have, that, hey, I think this is a little suspicious. I saw him playing softball over the weekend, and he's coming in limping Monday morning, and he said he got hurt on Friday at my job site. Yeah. So that's something to always let your agent know, so he can address that with the adjuster that handles the claim. As you turn in a claim, you get an adjuster, and that adjuster will do that claim. And those adjusters are specific for, a work comp or general liability or property, whatever you have. So they're well known on that. And if it's something suspicious and they say, hey, yeah, we can look into this, and they do it. And for instance, say someone says, hey, my back hurts, I can't come to work. And they go out and do a little surveillance on him, and he's out mowing the yard and weed eating at his house.
Sure.
And they get pictures of it, they can deny the claim. So it's always something to let your agent know, say, hey, I don't know if it really did happen at our job. And that's what Joe's so good about. He's got an incident report every day. So if someone gets hurt, it's reported and there's a witness, and he marks it, dots his I's and crosses his T's, right?
Well, you try to as much as possible. Yeah. So our process is at the end of every day, the crew chief, the supervisor, will ask, are there any injuries to report? Did anyone get hurt that I don't know about? Obviously we ask that, immediately after the injury, it gets reported.
Correct.
But at the end of every day, there's always a question. Did anybody get hurt that didn't let me know?
Yep.
That way it's us trying to give them every opportunity to say that they did, so that in that scenario, when Monday they say their back hurts, so, well, now wait a minute, Friday, Scott asked everyone if there was any injuries, and you didn't report the injury.
Correct.
So it kind of gives us one more step to just try to make sure that everyone's on the same playing field.
Correct. And you being upfront about it and being involved will save you in the long run of premiums on the work comp.
Yeah, that's absolutely right. Well, Blake, so there's a few more things I'd like to talk about. So we've talked about kind of the key insurance, right? The kind of the main piece of insurance, but there's a lot of minor or minutia pieces of insurance too that often go overlooked.
Correct.
So let's talk a little bit about your words, not mine. EPLI.
Yeah. So employment practices liability.
Okay.
So basically, it's wrongful termination, discrimination charges that come up against you as an employer. With today's world with the COVID-19 and all the layoffs and people needing money, this is one of the hottest claims that we're seeing right now is, hey, he discriminated against me or he terminated me wrongfully and I'm suing him.
Sure.
And without this coverage, you don't have coverage. So it's
Okay.
employment practices liability. So just reach out to your agent and they should know it. It's all based off of how many employees you have, what type of operations you're in, your turnover, stuff like
Yeah.
that. If you have, a lot of businesses have longtime employees and the turnovers are good. And, but then you have the industries that have a lot of turnover,
Sure.
contracting is one of them,
Yeah.
when it comes hot summer days
right.
and cold winter days, a lot of people don't want to work.
Yeah.
So they
Yeah.
find a reason to get that money to stay at home. So
Sure.
employment practice liability is a huge topic right now in the insurance world, especially with the COVID going on.
Yeah.
So that's something that you need to reach out to your agent and just advise them, say, hey, do we have employment practice liability?
Gotcha.
If I don't, get a quote and see if
Yeah.
it fits you. I mean, it's not the cheapest. It used to be.
Yeah.
But now with all the claims that we're having, the rates
Sure.
are going up on it.
That makes sense.
But it protects you on something like that.
Gotcha. So, and yeah, so you could have crossed all your T's and dotted all your I's and still something comes up. A claim still comes up. And so this would kind of be an additional barrier or additional support for you.
Correct.
Gotcha. So let's talk about one thing that you and I talked about several years ago that I hadn't really thought about was cyber insurance. I mean, everything's going online, and as our company's developing and growing, we're using more and more technology to try to scale and give the best customer service we can, such and so forth. So, but there is insurance that covers that side of the business too.
Correct.
Is that right?
Yep. There's cyber policies and they vary depending on the operations, of course. And that's a good thing. Everyone's seen the Target hacks and all that. Think of all the people they hire just to protect them from their hacks and getting into their system. So the low hanging fruit are these small business owners. They don't have the people that are employed to watch their malware and firewalls and all that. So that's something that we're seeing in this industry as well as being hot as, they attack and they get to your data compromise coverage there. So they hack into the system and pull, personal identifications, credit card numbers, and then they hold you liable for it until you get it recovered. So,
or they can just lock up your system.
Correct.
They can shut your system down and say, we need X dollars to, get you back up and running.
Yeah. And we're seeing it, you see it on the national news as well. And, Bitcoin, a lot of people are hacking systems and holding it for ransom and say, hey, you owe us 10,000 in Bitcoins before we release it back to you. Well, and they're doing that. So this cyber coverage definitely protects you. You need to ask your agent because it's going to be variance on what your operations are and your exposure. Some people have third party where they say, Blake, I don't collect any personal information. It all goes through a third party. My third party has that all covered, so I'm not liable for it. Well, if that's the case, there still could be some potential. So you can have a lower limit and feel comfortable with it.
Okay.
If you're storing everyone's, social securities, credit cards in your system, which hopefully you aren't. But if you are, you can get coverage for that.
Sure. But I would hope that most contractors that are listening to us have a CRM that at minimum has names, addresses, and cell phone numbers. And those are personal information.
Correct.
So the cyber policy is definitely going to vary depending on your operation and how you operate, that sort of thing. So definitely talk to your agent, but it is something that you certainly need to ask about. So let's talk about this. So we've talked about the big policy items, the smaller policy items. Let's talk about umbrella, which to my understanding kind of covers all of that. Is that right?
Correct. So you have your underlying limits and your umbrella floats above it. So as your underlying limits get exhausted, that umbrella will come down and kick in. And it also will sometimes come and protect you for if something fell through the crack. If the underlying limits don't protect it, and the umbrella will come in and kick in and protect you. So, That's a one thing that we always say is we suggest umbrella policies, even
Sure.
on your personal policies. They're inexpensive for the coverage that you get. And it just gives you extra coverages in place that if you do exhaust your limits on the underlying, that kicks in and protects you for additional coverages.
Sure. So it's an additional layer of coverage
Correct.
for things that you do have covered or things that you may not have covered.
Correct.
Okay. So it's kind of a final line of defense.
That's right.
Very good.
That's right.
So Blake, I think that kind of is a pretty comprehensive look at business insurance.
Yeah.
Would you say?
Yeah.
Commercial
It's
insurance?
pretty general. And that's why, like we said, is talk to your agent.
Yeah.
Be upfront with them. Don't be hiding anything from them. If you're doing flat work concrete and you also do foundations, we
Sure.
need to know that because there's two different exposures there, so.
Well, and that's a good thing to talk about too, is so say, we are doing something with a higher exposure and one of our guys gets hurt or we damage some property doing a higher risk exposure, that would probably have some pretty negative consequences, wouldn't
That's
it?
right. Yeah. Majority of the time they're going to be covered.
Sure.
But then when it comes up for renewal, you're going to have to go find you a new place.
Sure.
So
Yeah.
if you weren't being upfront with your agent and your agent wasn't upfront with the carrier, then they're going to say, we'll see.
Yeah. The carrier say, I recognize that name.
That's right.
We're not going to do this twice.
That's right. Then when you go to another carrier, they're going to see a loss on your policy and ask you what you were doing. So that's
gotcha.
Sometimes it's best not to take those one-off jobs that you aren't really insured for, just to protect you and your business for later.
Now, sounds good. We've got a question here, and this kind of getting into the homeowner side.
Okay.
So Jose says, I recently replaced my whole fence, board on board, cedar, 7 foot. Do I want to report this to my home insurance agent, especially since it was pricey?
That's something that you definitely need to reach out to your personal lines agent. One is majority of the policies, and this is just speaking general terms.
Sure.
It's 10% of your building value, so your dwelling. So if you have $100,000 house, you have $10,000 for other structures. So that's something you need to call your agent and let them know, and just make sure that, hey, if something were to happen, I have coverage that will replace that.
Sure.
And you got to look at your policy. Is the fence a replacement cost or is it ACV, actual cash value? So
sure,
that's something that that's specific to each agent and each carrier.
Yeah. In every policy.
Exactly.
One policy to another.
Exactly.
So one thing, what I think Jose may have been asking, and maybe not, is so he had an older fence, but he replaced it on his own with a newer fence. Should he let his agent know that he now has a new fence?
Yeah, you definitely can. They're going to come out and assess it when damages happen. So they're going to know that, hey, this isn't your 50-year-old fence. This is a 10-year-old fence.
Sure.
And that's how they're going to replace it. So,
but it's probably always helpful just to let them know.
Yep, exactly.
I replaced my old fence that was falling down. Now I have a new beautiful fence that costs quite a bit.
That's right.
And they might want to come take a look at it.
And these fences, as the metal and wood is getting expensive, and
it really is.
You put up a beautiful fence around a whole property.
Yeah.
That could be 10% more than your building value. So
you're not kidding. Kidding. And if you would replace, say a 4-foot treated pine picket fence with a 7-foot board on board fence, then the cost is significantly higher.
Correct.
It's always a good idea for your agent to at least know that, have that in your file that, the upgrade was done.
Correct.
So Jose, let your agent know. So guys, what we want to do is we want to split this into kind of 2 different subject matters, the commercial side and the residential side. So the residential side being really from a homeowner's perspective. So not me as a fence company owner, but me as a homeowner having contractors out. As a homeowner, what insurance should a homeowner ask for or ask to see from a contractor, say, coming to build a fence at their house?
Okay. If it's a fencing contractor, always ask for a certificate of insurance up front.
Okay.
And have it where it shows the date that it was processed in and the policy periods, because you want to make sure that it's still in force. And if you have a question on it, you can always call their agent or their agency and say, hey, I'm getting a fence built by Ozark Fence.
Yep.
I'm calling just to verify coverage. And we can always reach out and say, yes, he's got coverage from this date to this date. You're always wanting general liability.
Yep.
And you're wanting workers' compensation.
Sure.
And commercial auto.
Yeah.
If they're bringing their vehicles on your premise. And the big thing is because on the workers' compensation is a huge piece, because if you get hurt on my property doing work at my house,
Yep.
and you get hurt, you don't have coverage, you're going to sue me.
Sure.
So that piece of paper will protect you. And, some people go the extent of getting additional insured, which that's a little much for a private residential.
But can we explain what that means, additional insured?
Yeah. So additional insured, you'll see it on your bigger contracts.
Yeah.
These big GCs say, hey, we want to be additional insured on your policy. And sometimes it costs if you have a blanket on yours, so it doesn't cost you. But what it does, it gives them the right to turn in a claim on your behalf.
Okay.
So say, Joe, you worked on my fence and you damaged my siding of my house. I can turn that claim in since I'm additional insured on your policy.
Okay.
So
and that really would protect, on a larger project, would protect the project owner from someone that did damage, but won't accept responsibility for it.
Correct. And especially that big GC that has 50 guys working under him, he wants to be able to turn a claim in for their work if something were to happen from their work.
Sure.
So that, it doesn't, he's the main guy.
Yeah.
So he's the main contact to him and the big owner. So
you would mainly see that more on like a commercial project.
Yes.
Residential project, maybe you would see that on a much larger residential project. So when there's several different trades all on the same property.
Correct. Yeah. Majority of the time, it's just a certificate of insurance will satisfy the residential needs.
Okay.
Just make sure they have general liability, workers' compensation, and commercial auto if they're bringing the vehicles on the premise.
Okay.
And
so they ask for their certificate.
Mm-hmm.
And then I always think it's a great idea once you get certificate to call the agency and just make sure. Because there's you hear on the news and you hear stories and rumors about contractors that would go get a policy and then cancel the policy.
Mm-hmm.
That you used to hear that a lot more in the past when you would only, to get a new policy in effect, you'd only have to have a down payment.
Correct.
And then you'd be on monthly payments. It seems like anymore, the insurance agent or the insurance market in general has kind of caught on to that.
Yep.
And as a newer contractors, they generally have to pay quite a bit up front. Is that right?
Correct. And it's getting harder and harder for those individuals to get coverage if they've canceled the policy and rewrite it 6 months later and cancel it, because they're starting to show that. They're saying, well, he's been in business for 2 years. He's only had coverage for 3 months. So they aren't willing to just throw a policy out there like they used to.
Okay. Yeah.
Because they don't want to pick up that lapse time. That's why a lot of these policies, if you do have a lapse in your coverage, it happens every now and then, billing mistake or something like that, where you have to sign a no loss statement saying that, hey, I did not have any losses during this period to this period where my insurance wasn't in force.
Gotcha.
So that's something to really think about as well.
Yeah. So, and that's as easy as, like you say, the certificate will have the agency's name and contact information on it.
Correct.
So just to be as simple as picking up the phone and saying, hey, I have a certificate from this insured.
Mm-hmm.
Is it still in effect?
Yeah.
And go from there.
And another thing is that I like to do is I say, have your agent send it to my email. So it's coming from the agent's office or agency. It may not be the agent, it may be a CSR.
Sure.
Which most certificates are handled by CSRs.
Yeah.
But it's coming from the agency. Well, that agency is not going to send me a copy of an insurance if it's not enforced.
That's not enforced.
Yeah.
Okay.
So instead of me collecting a big bundle of certificates at first and me passing it out to every homeowner that I do work for.
Sure.
It's coming from my agency.
Yeah.
So they don't have to question, hey, is my policy enforced?
Well, and that's something that we do is that when we get a request for a certificate, we pass it on to our contact in your office and they handle it all. So it's actually a little bit more convenient on our end too.
Yep.
And that we have one point of contact, because sometimes if it's a longer project so say it starts in November, but it doesn't finish till January or February, that's two different policies.
Yep.
Because the way ours end at the end of the year.
Yep.
And so now that homeowner or that commercial client now has a contact that they can reach out directly and say, we need a new updated certificate of insurance.
Right.
So it makes it easier all the way around.
Yep. And then even on the renewal list, we go over our agency. I can't speak for every agency, but our agency keeps track of every certificate we send out for that client. So at the end of the year, I sit down with Joe and I say, hey, are you doing work for these guys?
Sure.
He's like, yes, yes, yes. I will go ahead and send out the renewal certificate. So they have that in their file for Joe's business. So he's not bombarded with them all at once saying, hey, your insurance expired. We need a new update. We already do that for you.
And it's incredibly convenient on our end because you do at the first of the year, you start having all these different, commercial clients say, I need an updated certificate. Whether or not you did work for them before, if you're on their roster, if you're on their client roll, they're going to ask for updated certificates of insurance. So the fact that you guys do that takes a weight off of us for sure.
Yep.
So, but from a homeowner's perspective, so they've asked for a certificate of insurance and they've made sure that it has, the general liability, the commercial auto, and the workman's compensation, and they've called to confirm that the policy's in place. Is there anything else that they should be doing?
No, that I would always check references too.
Yeah.
When we have hail claims, there's a bunch of contractors that come into the area.
Sure.
And they may be there one day and they're gone the next.
Yeah.
And their work's not guaranteed.
Sure.
And so that's something else to think about, is not just make sure they have insurance, because they definitely need that, but make sure their reputation and their quality work is up to your standards.
Sure.
Don't just hire someone and move on. You got to make sure you're in it for a long haul, because you're going to be seeing that fence, or you're going to be seeing that roof every day that you pull into your house.
You bet. You bet you are. Absolutely. And we've talked about that in other videos. Yeah. You want to get references. I usually like asking for new references and old references. Yep. That way, because, with fencing, you see guys that they'll build a fence, or you see a fence that's brand new and it looks great, but 2 years later, it might not look the best. That's right. Asking for older references might also help too, to try to say, well, boy, when they built the fence, it looked great.
Yep.
But now I had this problem with the gate and they won't call me back. And actually, I can't get anyone to return an email or anything. So asking for new references and old references might be a good idea.
Yeah. Correct.
Now, Blake, let me ask you, so would it be weird, would it be odd if a contractor had two different certificates? I've seen this sometimes where they'll have one certificate for, say, workman's comp, and they'll have a different certificate for their general liability and auto.
And that's where you see it a lot. It is sometimes a market does not have the work comp carriers like we talked about.
Sure.
And they can write the general liability and the auto policy, but they can't write the work comp.
Sure.
So you'll see a certificate come from another agency with the workers'
that does have the workman's compensation.
Correct. So, and that's like we talked about, every agency is different. Some people have markets, a lot of markets that will be able to do that industry, and some don't.
Sure.
So you'll see that quite a bit on these, especially these one man shows that have a little general liability policy with their personal lines policy, and they also have a little commercial policy.
Sure.
But they don't have the work comp carrier, so they go out to another agency to get the work comp.
To write the workers' compensation. Yep. And that's perfectly fine, right? That shouldn't be a red flag.
Nope.
That's perfectly normal. Now, you'd want to check with both certificates.
Agencies. Yeah, that's right.
You want to check with both of them just to make sure.
Yep.
And I only say that because we've seen that occasionally, and it's perfectly fine. I wouldn't want a homeowner to see that and think that was abnormal.
No,
that was weird.
That's totally normal, especially in our industry. And sometimes you have a policy in place, and the agent leaves, and they try to reach and can't get covered. Another one, place the workers' compensation with them, and it's been 3 years, since they reviewed their policies, and they have two different agents, and they don't even know one of the agents, but they're still getting certificates and they're still insured.
Sure. So the best piece of advice would be just to call each agent that's on that particular
that agency.
Yep. Very good. So let's see. We've got a few more. So Jose was just following up that his fence was approximately 2,000 foot, and it was around $8,000 just for the materials.
Wow.
So at fencing, we've talked about this in other videos, fencing material right now is incredibly crazy. So we had a notice last week from one of our steel producers. So they're going up 5% in November 1st, 5% December 1st, and 8% January 1st.
Wow.
And you might add those up and go, well, that's 18%. No, the way they worded that was that it's compounding.
Yep.
So it's actually like 19.01% or something to that effect. So it's not only wood, unfortunately, that's going up. It's also the steel product. Understand general liability things that job site insurance will cover. What unexpected things or risks will insurance help with? That's a great question.
Yeah.
So is that so like outside the normal? Are there unexpected things that insurance could cover?
Yeah, I mean, that's why you have it. And
Sure.
that's why we talked about that umbrella.
Yeah.
You know, if your primary insurance doesn't cover it, hopefully your umbrella will kick in and protect you.
Yeah.
I don't know if she's from a residence side or
Sure.
from a commercial side, but if you're on the commercial side, that's why we always recommend an umbrella policy.
Well, and it's what it sounds like is like the general liability policy would cover things that no one's thinking about.
Yeah.
You know, when you lay, to your example, when you lay an extension cord out to run a power tool,
Yep.
you're not thinking that Miss Smith might be walking out her side door that she's never used while you've been there, but she walked out and tripped and fell.
Yep.
You know, you're not thinking about that. Or if there's job site debris that hasn't been cleaned up yet, and someone trips on the debris and has a claim, you know, I think that's really what general liability and the umbrella policy are for.
Yep.
It's for the unexpected issues that no one thought about.
That's right. That you're liable for.
That's right. Yeah. So. Very good. Great question. Great question. All right. And for those of you that have been live with us before, Jackson's watching. Jackson's my little boy, my little tank. Hello, Jackson. It's good seeing you.
I hope he's enjoying the baseball cards.
Yeah, not yet. Not yet.
Yeah.
So no, they are safely stored. They are safely stored. Well, Blake, I think we've done a pretty good job of covering really anything, really everything I had. Do you have any addition, anything I might have missed?
Well, I just want to talk kind of insurance and fence related.
Okay. Yeah, you bet.
You know, we talked about just some claim scenarios for a homeowner on their own privacy fence. You know, when you get a phone call and says, "Hey, Joe, my neighbor's fence fell down on my fence."
Yeah.
Are you already reaching out and saying, "Hey, call your insurance agent, get it turned in"? What's the process for you guys on your side? Do you wait till the adjuster comes out, or do you give a bid first? I mean, on my side, we see bids normally, and they correspond with the adjusters, and we kind of step back because we're the agent.
Sure.
So it's between the adjuster and the contractor that's fixing the problem.
Yep. Yeah, that's pretty typical, and we've seen it both ways. You know, sometimes in our area, usually it's a wind damage. You know, so high winds in the spring, tornado winds come through, or hail, and you see hail a lot in the spring. So we'll get a call. Sometimes the call will say, "Hey, the storm that came through last night blew my fence over. I need you guys to come fix it." And usually the first question is, have you reached out to your insurance agent? They need to be in the loop. Even if you're not going to claim it, it's good for them to at least know
exactly
this damage occurred. I'm handling it, that sort of thing. To Jose's point, that now they know that there is a new fence.
Correct.
But a lot of times, as Jose alluded to, fence is expensive. And so a lot of times it turns into a claim. And then at that point, like you said, we don't typically deal with the agent. We deal with the adjuster.
Yep.
So either we'll present a proposal, and then the homeowner will say, well, the adjuster was out and they saw this, this, and this. That was different than the proposal, or vice versa. Or they'll say the appraiser has already been out and this is his appraisal. And what, can you give us a proposal for the work that he's seen? And usually there's a little give and take on both ends, because the appraisers are seeing, how many houses in a day, especially after a major event. That's all these guys and gals are doing for days on end. And so there's things they might have overlooked that me as a professional I see. And, so we'll reach out and say, well, in our proposal, we also covered, we also replaced this and this. And they're usually generally pretty good to work with.
And that's a good point, Joe, right there, is make sure that you're on top of the claim. And if a professional is advising you that, hey, there's more damage than what adjusted for this claim, that you have the responsibility to reach out to your adjuster. And Joe, you probably reach out to the adjuster as the professional there and say, hey, this is what I saw. And the adjuster and the insurance carrier wants to make it right. So they're gonna come and talk to the professional and say, hey, actually, we agree. You're right. It's going to be $2,000 more than what we projected. We'll get it covered.
Yeah, and that's something that's come up several times. And so what we'll typically do is if we see something outside the scope of the adjuster had given, is we'll take some pictures. Here's what we're seeing. So usually we'll call and ask them for their email. We'll send them an email. Here's what we've seen. That's why our proposal is a bit more than what your what you've adjusted for, and kind of try to come to an agreement that way. Here's the thing, Blake, is I really want guys to know, and gals out there listening, is like, adjusters are people too.
Yep.
You know what I mean?
Yep.
Is they're doing their job, right? And their job isn't to, try to limit the exposure of the company as much as possible.
That's right.
But that's kind of what you hear people say. They're just trying to do their job, and their job is to assess the damage that they see. And they're seeing so much damage when when high winds or hail come through, they're seeing so much damage in a day. They're human, and humans are going, I make mistakes daily. I can't expect someone else not to make any mistakes. And so a lot of times when we do that, so we'll take pictures and we'll just write a brief explanation. Here's what I've seen, or here's some things that, you saw the immediate damage, but there's a few things that will also have to be replaced when we're replacing that damage, that are tied into the damage. And generally they're pretty easy to work with. Sometimes they want to meet back out just so they can see it and have a good feel for what's going on. A lot of times, the pictures are sufficient. They say, all right, I understand. I do see that damage. I don't know how I missed it, but I'll include it in the, revised adjustment and I'll send it over.
And that's a good point also, is that's why you reach out to the professionals, a reputable company, because adjuster's going to listen to someone that's local, that's been around for a long time, that has been doing this industry. And it's not a fly-by-night company coming in and saying, no, it's $5,000 more than what you adjusted for. And, they don't see eye to eye. So that's why it's always good to do your research, reach out to a reputable company like you guys is, and listen to them.
That's right. That's right. So, and we're kind of coming into fall and winter, but spring will be upon us soon.
Yep.
And spring brings all the damage. So, so from a homeowner's perspective, if you do have damage, it's always good to first reach out to your agent, let them know so that they can get the process started. Because sometimes it's not immediate. It's not the next day someone is going to be out. So the sooner you can start, the better. And then reach out to, a professional or 2 to 3 professionals is usually what I recommend. Is reaching out to, some qualified professionals in your local professionals in your area. I'm glad you brought up the local aspect.
Well, and also, you can turn it into your insurance agent, and if it's below your deductible, it's not going to hurt you. It doesn't go against you as a claim because you're paying it out of your pocket. The wind and hail deductibles now that we're seeing in our area, we're starting to see percentages. It's not just $1,000 deductible anymore.
Okay.
You could see a 2% wind and hail deductible on some of these houses or commercial properties. And that can be significant if the building value is high. So it's 2% of the building value. So sometimes these fences may be under the deductible if it's a wind caused damage. So it might as well the homeowner or the commercial building owner pay it out of pocket and then not go against the insurance.
And the agent's there to help in that determination.
Exactly.
Right? The agent's there to say, well, you do have your standard deductible, but there is a wind and hail deductible of 2% or whatever's in your area, and because they're the professional in that realm. So now, Blake, let me ask you this. So we've talked about storm damage. Sometimes if there's winds and hail high enough to damage a fence, it's probably damaged some other things on the property, whether it's siding or roofing, things like that. So, and I'm sure this is going to vary policy to policy, but in general, would the fence be part of the claim of, say, if the roof also was damaged?
It'll be a per occurrence base. So majority of the policies are like that.
Okay.
And so it will be covered. The roof, the siding, the windows, and the fencing will all be one deductible.
Okay.
And it'll be all category as one claim. Now it's all you need to talk to your agent, because each policy is written a little different. But that's something that you need to review with your agent. Then you'll know up front that if it's not that way, then I'll have multiple deductibles. If it is that way, then I only have one deductible. And that's something just put back for,
and they'll help you kind of navigate that process, figure that out.
And another thing that Joe and I were talking about earlier today is, what if the neighbor's tree falls on my fence? Is that my responsibility? And really it's looked at that it's an act of God. So it is covered under your homeowner's policy. It's not your neighbor's responsibility. Now, if there's a dead tree on the neighbor's premise and you've sent them papers saying, hey, you need to remove this, it's leaning and it's deteriorating and it's going to fall on my fence, and you have proof of that, then it can kind of go back to your neighbor's liability for not getting it taken care of. But majority of the trees are just going to fall down from a windstorm, and they think, oh, my neighbor's responsible. It's his tree that caused the damage. And that's not the case.
Yeah. We do see that from time to time. Yeah. Especially in the spring when the ground's really wet and we get high winds, it pushes a lot of trees over, and we'll hear that occasionally. Like, well, my fence is damaged. I need a bid because it was my neighbor's tree and they're going to be paying for it.
That's right.
Well, maybe not. Probably not. Unless your neighbor was out there sawing it down when the wind event happened. Like, I don't know. But that's probably is going to vary, again, state to state, that sort of thing. You'd want to reach out to your local agent. Well, Blake, I appreciate you coming on with us today and helping us better understand insurance and asking some viewer questions. If someone is in the state of Missouri, now I guess that's a good question too, is agents, it's very state by state, but if an agent is, say, in Southwest Missouri and a contractor from, say, St. Louis wanted to reach out, are there territories really or anything like that?
Nope. It's all where the agent has his license.
Okay.
So I'm in Missouri, I'm in Oklahoma, Kansas, Arkansas, Tennessee, California, Florida. So we have an agent in our office that either has one in that state, so we can write in all different states if we need to.
Oh, very good.
Now, not everyone's got that luxury.
Sure.
It just depends on who your agent is and what agency they're with. Sure. But we write all across the Midwest, so we aren't tied down to Missouri.
Okay.
But like we said, each state's got different requirements.
Right.
So work comp requirements that we spoke about today is just based on Missouri. So it could be different for Kansas, could be different for Arkansas. And
now let me ask you, I was trying to wrap this up, but that spurred another question for me. So we operate out of Missouri, but we're pretty near the Oklahoma border. If we go into Oklahoma to perform work, does our insurance requirements change?
No, you're going to be covered by your policy.
Okay.
Because your employees are domiciled in Missouri. Now, if you're hiring employees from Arkansas, then you may have to get another policy if your policy does not protect that.
Okay.
So just make sure that you let your agent know that, hey, I will be traveling to these states, this state, but I am using my Missouri employees.
Okay.
So it's fine that way, but if you start hiring from outside, then that changes the policy.
If you had a larger commercial project where you're bringing on employees from a different state,
that's exactly what you just said, is where we see those other policies come in and play big time is when you have a general contractor that's performing work in Arkansas for 6 months and he's hiring subs from Arkansas, and then he goes out to Kansas and hires subs from Kansas. How do you protect them? So that's why you need to have that conversation with your agent. Let him know exactly where you're going, what your operations are doing, and make sure that your operations aren't changing from state to state.
And that probably is where it comes into play, having a relationship with your agent, having one agent that you have a long-term relationship with so that they know to ask that question. Hey, Joe, you did 2 projects in Kansas last year. Do you see any on the horizon this year? Right? That sort of thing.
Yeah, exactly. It's all relationship based and trust with you and your agent.
Yeah, so that's right. Well, Blake, like I said, I appreciate it. If someone's watching this and wanted to reach out to you, how would they do that?
You can email me at bwixson, which our names are on there. So bwixson at PJC. So Peter Jack Charlie insurance.com. And I can answer any questions that you guys have, or you can call us at the office. It's 417-833-3800.
Very good. Blake, like I said, I appreciate you coming on the show. I appreciate you being a great agent for me and my business. You and I have known each other for quite a long time.
Yeah, we go way back.
And I really appreciate that.
Thank you.
Very good.
Appreciate you.
Well, guys, I appreciate you guys for sticking around, watching the live view and interacting with us. If you do have any questions after this broadcast is ended, drop them in the comments below. I'll keep an eye on it. If it's an insurance related question, I'll probably forward it to Blake. But leave your comments or leave your questions in the comments below. Again, if you found this live broadcast enjoyable, helpful, or heck, even entertaining, consider giving it a like. If you're new here, we'd ask you to also consider subscribing. If you do subscribe, hit the notification bell so that you get notified each and every week when we have new content available. But for now, I'm Joe Everest, the fence expert, here with Blake, the insurance expert. Wishing you a great day.